Shopify stock up another 5% following the news. They did it again with a record Black Friday sales of around $4.1 billion at its peak, doing $4.2 million in sales per minute, a 22% increase year over year. So this makes investors wonder, does this mean that the consumer is strong, or are we talking about Shopify enabling, empowering some of the strongest merchants and that they are rapidly taking share? They're not the only ones saying, hey, we are winning. You also have Temu, which is a Chinese platform. I think it's owned by Pinduoduo, saying they're taking significant market share with big gains in transaction size. Also, buy now, pay later is a key function that's helping to drive sales. That might hint at my concern that the consumer is actually weaker than you might expect. So far, though, Black Friday and Cyber Monday sales were better and record figures, a lot better than a lot of folks suspected. That said, there are a lot of data points suggesting that Black Friday and the recent sales and the recent consumer developments are weaker than a lot of investors expected. For example, Best Buy just last week talked about a softer than expected revenue during the third quarter. They talked about near-term sales pressure on our industry experiencing for the past several quarters, and that they lowered their annual revenue outlook, talking about a weaker, consumer, talking about weaker consumer demand, macro, the recent macro environment and concerns there, how it's difficult to predict. I also previously talked about how Walmart was also sending out a note of caution on consumer spending, seeing a downtick starting at the end of October. And as if that wasn't enough, you also see the insiders at Walmart, the heirs to the Sam Walton fortune, selling hundreds of millions of dollars of stock that they're exiting. So not only are you seeing this weakness, but you're also seeing, the insiders bail. Then let's go to another retailer. Let's look at Costco, where on the evening of Black Friday, they put out this notice that they talked about employee and executive bonuses, where the CEO, Craig Jelinek, this is last year's CEO, that he requested he not be given a bonus. And the compensation committee has honored that request. That makes me think their Black Friday figures weren't up to snuff, or at least what he wasn't expecting, that, or it's just a very honorable thing for him to do. I mean, certainly Costco has that favorable culture, but I don't think he would turn down a bonus if their figures for Black Friday were very strong. Okay, so what are my broad thoughts about, what does this imply for the market? What are my thoughts on the consumer? First of all, in full disclosure, this is not financial advice. Also, I expect a recession could happen in the next 1 to 2 years. If it does, my goal is to help my subscribers find potentially transformative investment opportunities. So if you're looking to take charge of your investment journey, consider unrivaledinvesting.com for compelling ideas and real-time portfolio updates. So when I think about the current landscape, just this past week, it's very difficult, in my opinion, to say, hey, we're going to have record Black Friday, Cyber Monday, everything is great. When at the same time, at the other end of your mouth, you have the New York Fed say, yeah, we've run a study on various different U.S. households and found that financial fragility is at its worst in a decade. Particularly if a household has an unexpected $2,000 expense, only 64%, which is the low for this past decade, would be able to pay that $2,000 expense. So the first thing, in my opinion, means that more households need to be doing their best to save, because you should expect the unexpected. You should expect random $2,000 expenses. That's just unfortunate reality if you live in the United States, whether or not it's medical or something like that. I personally keep my cash from my investment accounts at Interactive Brokers. It yields nearly 5% at 4.8% plus. So that's, I think, super important for folks to think about before you consider investing or buying something or looking for some sort of speculative thing. Get your savings in order, so that way you could handle the unexpected. You can handle stressors. What about investing once you have that capital saved up? What about investing in, securities that hopefully can result in growing your assets over time? So let's talk about Shopify, because clearly they're taking market share, which is what I want to see. That's what I want to see with companies that I want to own. I previously did own Shopify, but truthfully, I wasn't happy with how they both bought and sold a logistics company for a sizable loss. It made me, concerned that management wasn't thinking strongly enough about capital allocation and how are they going to return, investment returns. But thinking about how does this business deliver in the years ahead, I go to AI Ticker Chat, leveraging AI Predict, which analyzes, the financial statements, the transcripts to get key insights on what's maybe their revenue growth over the years ahead, what's their profit margins, what's an N multiple in the years ahead. So looking at this, it's effectively saying maybe there's 150% upside, maybe there's a little bit of downside over the next few years. Personally, I think this take from AI Predict, from once again AI Ticker Chat, within using AI Predict, I think this is a little it's not strong enough in terms of profit margin, saying 5 to 15%, because in 2 years prior they were doing 5 to 6% margins. So I think they clearly could do better than that. And I think the N multiple a few years from now is a little too high, assuming 40 to 50 times. That's just too rich for my taste. Now, the beautiful thing about this is you can quickly change it. So I'm going to show you how I changed it. So I put in 15 to 25% profit margins and a 20 to 30 times N multiple 5 years from now. I kept the revenue figures because, ballpark, that looks right. They're talking about 22% growth in Black Friday sales. You see 21% growth in 2022. So, this is broadly in line, seems reasonable. And so this gets to a slightly less optimistic take where it's saying maybe there's 100% upside over the next 5 years. Maybe there's 7% downside, maybe a lot worse. This is a hypothetical framework. It depends on will they actually hit 15% profit margins. They're not there yet. But I personally think that there are probably better plays out there. But to check, hey, does this revenue picture even make sense? We've actually now included Wall Street estimates. So you can see here are the different scenarios based on what AI Predict is showing. And you can see, okay, wow, Wall Street, the reason why Wall Street and is pumping this up is because there are some analysts that think it can grow a lot faster than even what AI Predict is showing. You can see the analyst high is suggesting that this gets, significantly higher in terms of their growth and in terms of their acceleration, whereas their average is more aligned with our high case. And that, just to show you going back, the high case that we were showing is around 24%, and 20% growth. So clearly Wall Street thinks, hey, Shopify can continue to execute and grow even faster. Personally, that's a little bit, tough. It's a tough assumption to make, saying, hey, we think that there's some analysts that think, hey, you can do 25% plus growth in the future. Personally, I'd rather underwrite situations where I can say it's much more likely to hit those figures. If this video has been helpful for you, you've been watching Unrivaled Investing, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning in.